Justin, we're going to repetitively talk about the only trades that we're in right now. You actually just got in today. So we're MicroStrategy and ZIM. Let's talk about it.
Yeah. So what's going on that front is that like I'm kind of following you on the ZIM trade. Honestly, Josh, you know much more about that than I do. I just kind of see like, oh, Josh seems to know what he's doing. So we'll get a few options. Just kind of
that's where you went wrong. That is where you went wrong, Justin, because you are following the wrong guy.
And oh, don't worry. If anything goes wrong, I'll completely blame you all the way. I have absolutely no agency whatsoever in this. Anyway, so there's that. But the other thing I was looking at too, and this is kind of more of a big picture thing, is that I was trying to figure out my suspicion, whatever it's worth, and whatever it isn't worth, is that you're going to see I feel like we're poised for a correction, particularly in the crypto space. Now, we've talked extensively about where that might start, but I try to think, okay, well, listen, let's just set the metrics aside. What does it actually mean at the end of the day? And I think what that means is those people who have exposure to particularly Bitcoin, they might not be as valuable as they were before. So I also picked up a few really, really far out of it. I think it was 90 days. It's December, I think, 17th. MicroStrategy put options. I'm talking about like just very speculative. I basically didn't expect to see anything back, but I thought, well, whatever happens, if the market goes down,
and then that gives you downside protection if the market comes down too. Then that's a leveraged company that if the market comes down, I don't see why MicroStrategy would be any different. If Bitcoin goes down, even better. So I think that's a pretty good company to throw a long ball put option on. I definitely am not opposed to that at all. And I would consider doing something like that as well at some point. But right now I'm trying to delve myself into one trade at a time and position. Well, you get a few when you're trading all year round, you're kind of just trading to maintain, to grow your portfolio slightly. And then when you see the potential 5-10 bagger, that's when you have to pounce and put on your high position sizes. Let's just put some numbers on this. I won't tell you exactly, but I started trading around, say, this time last year. And I've started with 8 to 10,000. I was making nothing. And then when you find a trade that you have extremely high conviction on, you have to know everything about that trade, everything that could possibly happen, and you put your position size on that will be appropriate. I highly over position sized on this company, but it happened to work out and it tripled my portfolio. And since then, my portfolio has just been choppy. It's up, like, say, at around like 35,000 right now, but 20,000 of those profits is from one stock. The rest of that 5,000 is just from choppy trading. This is another one of those trades where I'm not over leveraging myself, but I have a high degree of my portfolio. Well, like, say, like, I think 3,000 of my $35,000 portfolio.
Another thing too, Josh, is like you've been kind of, didn't you say that you were deleveraging yourself a little bit?
Yes. So today I was trading on margin just slightly, because I wouldn't get margin called. It was just maybe a few thousand, but I took all the margin off and then and some, and I got some more ZIM just because I don't know how this trade's going to work out. If the market comes down, all my options will expire worthless, and you have to understand that when you're entering the trade. So I know my risk tolerance. I'm saying, okay, I'm willing to lose, say, 3,000 to 5,000 on this trade. If the buying opportunity presents itself, I would like to put all 5,000 into it, but I don't want to continue my margin account to go up while I'm buying. I need to deleverage other things I've taken some profits on some coal. I sold a few companies that I just didn't really have any conviction on. I just sold them outright, probably for either a slight loss or slight gain, nothing really serious. I just want my portfolio to be a lot cleaner.
Okay, let me ask a follow-up question for that. Let's go back to ZIM for a second, because this is one of the things I don't have a good answer for too with another one of my equity positions, which will remain nameless for the time being. Is that let's say ZIM does particularly well. How would you, for example, let's just say you've got 10 options, just hypothetically you've got 10 options.
Mm-hmm.
How would you take profit. So for example, like one thing might be is like, okay, well, let's, I'll sell one option or maybe two options pretty conservatively when I've got just enough profit, to cover my basis. So then I've got 8 options left, but I've recovered my basis. So I'm playing with the house's money. And for those remaining 8 options, then I would take no profit at, this point, this point, this point. And then if I miss, or if let's say I miss the boat on 2 of them and, they completely go worthless at the end of the day or something changes, I still have the run up. What's your take on that?
Right now, the stock price is around $44 to $46. My all-time high was $60 or whatever, and so a few weeks ago it was around $45. I was telling Justin, hey, I'm getting into this company ZIM. I like it a lot. I was buying some options, not enough options. We went from 45 up to 60, and my options were up about like 300 to 500%. I only had 2 options at the time, so I sold one on the way up, probably around 52 around there. I was like, Justin, this stock just took off. I wish I could take profits on the way up, but I only have 2 options and I'm still bullish on the company, but it's just moving too fast. Do you remember that conversation at all?
I do.
So this time I will take profits on the way up, but I would like to, it depends on how it's moving. Before, every single day we were going up like 5%, and most stocks just don't move 5% a day. It was getting overran. It was getting too hyped up. I was seeing Twitter. Too many people were tweeting about it. So I sold. I would say my exit price would be for the majority of my options would be around 60. I would like to see if there's more room to run, which it absolutely could. I wouldn't be surprised if the stock went to 65, 70. And that for options would be incredible.
Okay.
Well,
so I guess
something that I really like is there's the sentiment in shipping is going down slightly. This week we saw there's been a lot of chatter about how shipping rates has gone down, but people are cherry picking data. Rates from China to US rates are down only. They're down like 40%. But those are the on aggregate total rates are up on the week. And I like to see the negative sentiment. No one's really talking about ZIM in particular. When before there was quite a few on Twitter. If you just kind of search through this stuff, now there's only getting a tweet on ZIM say like 3 times a day. With every other company, that's like 300. So I really like everything about this company. So has to be something wrong about it.
Well, probably the fact is that they have excellent fundamentals, which is apparently
that's definitely the wrong game I should be playing in this market.
Well, the problem is like you're doing everything right, but like we're all back up. It's channel your mana Reno here, right? I don't know the rules really make sense, or it makes sense to the extent we think that makes sense. Anyways, whole nother topic of conversation. Yeah, I guess really the way I kind of view it for myself is that like once I've got my basis back, like I become, and this is probably a really bad way to invest, but I become much more not passive, but like a cavalier, much more cavalier. It's like, oh well, whatever, just let it run and see what happens. And that's probably not really the best way to invest.
Well, maybe invest, but when you're trading, especially options, you need to be very wary about data decay, because the stock could go from 45 to say 60, but if that's at the end of the option, I'm still potentially going to lose money. So you have to be extremely right about the timing when you're dealing with options.
Josh, let me see if I can find my graphic here. Did I send you that picture of it was the mining, the Bitcoin? What was the name of the Bitcoin miner we talked about earlier today?
Mara or Riot?
Hold on. It starts with an M. I want to call it Marathon, but it's not.
MARA.
Yeah, that's the one. MARA. I was looking. Let me just see if I can. Here we go. Right here. Yeah. Marathon Digital Holdings. If you go out to January 20th, 23, if you think that Bitcoin is really, or phrase it like that, if you think that Bitcoin is going to go down tremendously and that's going to take Marathon with it, you can get an insane amount of leverage for your option trade there. It's basically 3 cents, 3 to 5 cents.
Well, what's the stock price, and at what price?
What strike
is the option? What strike? Yeah, sorry.
$1.
What? $1? Well, no shit. Well, no shit that is priced so cheaply. So if you think that Mara is going to go bankrupt, if you think Mara is going to go bankrupt in the next year, then you can get some cheap options.
Well, actually, it's not the next year. It's next year and a half. It's 469 days. Okay.
Yeah, that would be it.
But what I was going to say too is like, even if you don't think it's going to go to 1, like let's say like, it takes, shit down to like, 15 or whatever, right? The thing is, because you can buy so many option contracts, let's say that goes from, let's say like, you buy it in at 5 cents, let me think about this. You buy it at 5 cents per contract. So you're at $50 per block of 100. And you put in, let's say you throw like $400 at it or whatever, right? That could easily, if it becomes $1 or like $1.50, that's, I think, the play. Not that it's going to go down to $1, but rather that you see volatility that's going to take the thing down. That's, I think, going to be the sweet spot there. But anyways, just some food for thought.
Potentially. I don't know. That's probably not a trade that I would put on, but I also.
Yeah, just to be clear, this is just purely like, oh, I'm throwing $300 at it. Just going to happen.
Yeah, you're just kind of thinking about it. And those are nice to do when you have an extremely asymmetric trade that's pretty cheap. I really like those. I did something like that with silver. It has not worked out, where you could buy a bull call spread, I think, saying, well, it's not over yet. I think it's like, I still probably have like 9 months. If silver's over like $50, I will make like 15 times my money. And it was like $300. So it was like a 5x risk to reward. And I was like, hey, silver doubles, I'll make a lot of money. This is really just pure speculation. We're talking about stonks. So maybe we end it there.
Yeah, like I said, that's pretty much it. Like I said, some topics to talk about this weekend. But Josh, always been catching up, sir.